Dear guests, welcome back here at Speaker Hall. I hope you're having great time so far. Next in line, we have a panel discussion that will look into all things fintech and how it's shaping the future of finance. Please help me welcome the moderator of this informative session, and I hope I will pronounce your name correctly, David Gyori, CEO of Banking Reports, who will introduce his speakers. David, dear speakers, the stage is yours.
Thank you very much. Can you hear me in the back? Yes? Very good news. All right, the gentleman put his hands up. So I'm David Gyori, and I'm advising boards and CEOs and executive managers of banks all around the world about innovation and regulation. In the past 10 years, I have worked in over 50 countries globally. And we are having an amazing panel. So we will hear a lot of important and exciting things, and we will learn a lot. Please allow me to introduce the panelists from my left to my right, if you allow this. I am only basing it on physical sequence. So we are starting with Mr. Prasad Khambalikar, and he is Regional Director of Banking and Financial Services of Oracle. You know Oracle, you know Oracle's core banking products. You know that literally thousands of banks use Oracle as the core system, especially tier 1 banks. So when we are talking about the future of banking, he is the right person to turn to. Core banking is obviously the heart of us, the heart of banks. Let's give him a hand, please. Thank you. On Prasad's right is sitting Mrs. Viktoria Soltesz. And Mrs. Viktoria Soltesz is the CEO and founder of PSP Angels. And PSP Angels is the independent consultancy to go to when you want to understand how money moves around globally, especially, and when you want to understand how banks think, feel, and comply about how money is actually moving around. And there is something very beautiful. Viktoria recently published a book. Do you know the title? Moving Money. That's what we are talking about. And she brought one copy for each panelist. But there are 4 extra copies. So the best of the best from the audience can today receive a free copy of Moving Money Around personally from Viktoria. Let's give her a hand. On Viktoria's right, we have Mr. Yannis Matsis, who is Managing Director and Global Head of Business Promotion at MUFG Investor. MUFG Investor is actually a top 5 global investment management firm. MUFG itself is a top 5 global bank. So let's give him a hand. On Yannis's right, we have Pangratios Vanezis from KPMG. Do I have to introduce KPMG? I think no. Everyone in this room knows KPMG very well. 300,000 full-time equivalents globally. 300,000. Anyway, so let's give him a hand. Imagine that knowledge base. Anyway, and on his right, we have Mrs. Kamalika Poddar, who is the founding member of LXME. Now, who knows what LXME stands for? I tell you the secret, LXME stands for Lakshmi. And who knows what Lakshmi means? Lakshmi is an Indian goddess representing wealth and prosperity. And am I right? Yeah. And guess what? Actually, this name is a talking name. It's a metaphor because LXME is a company which is helping hundreds of millions of women in India entering the middle class, but entering the middle class in a way that they can manage their own finances reliably and in a conscious and mature way. And I think that is an amazing mission. It's good for India and good for the world. Now, let's give her a hand. So, the first question is a hard one, but a beautiful one. Let's imagine that we are in 2050, okay? And you are the CEO of a market-leading bank, a very successful bank. How do you imagine, how do you envision your bank in 2050, the bank you are the CEO of? Let us please start from here now, just for a reverse physical order.
So I would like to think of our bank more than just a bank and more of a finance alley. So play of words, it'll be financially, but it'll actually be finance alley. And what the finance ally would actually do is to help improve everything, every worry that you have about money. And they do it in a way that's, omni-channel. It's also on the metaverse because increasingly our lives are becoming more and more digital. So all of those good things come together on one platform where even the most boring parts of finance, we take care of it for you.
Okay, so we are in the metaverse in Kamalika's bank. Pangratios, your bank.
Yes, my bank. Well, if we are in 2050 and there are banks, if we are in 2050 and there are banks, and these banks are not an oligopoly, so there is no an amalgamation or a concentration of global banks, and there is and there is a healthy relationship between the state and how money goes round and moves around. So definitely, I would agree with. It has to be a financial ally. It has to support the development of new enterprises, innovation. It has to have a sort of a stable environment with which money evolve and created in a way that is beneficial to the customers. More trust, and I think that's a very, very big issue that I don't know whether the time suffices today to discuss this great part of the. And obviously, financial positively contribute to the financial literacy and how economies and the societies in general are evolving. So customer-centric, supporting the stability and the financial prosperity of the, is it a regional, is it a state, is it a national, is it a global, in the areas that they wish to be operating and provide a stable backbone with which economies can flourish.
Okay, stability and innovation. This is how many CEOs in reality feel. And trust, very important. Yes. Okay, Yannis, your bank. It's owned by...
It's on by default.
Yeah.
Thank you, David. It wouldn't be a bank. And I don't think there can be a successful bank in 2050. If I was the CEO of something successful, it would be a firm which is the personal assistant to all my clients, that manages all their life. including the finances. But finances is just a little bit. By 2050, everybody will be purely online. There will be no bricks and mortar. And it's all about user experience and engagement. And if you think about it, the best way of engagement is when you don't pay attention to the engagement. So I am sitting behind, or my company is sitting behind your mobile phone. If it's banking something, it's all your data. All your data, it stores them, it knows your behaviors, it knows what you want to do, and it provides seamless interaction between you and your own world, which includes your finances. There will be a mobile app that is a banking mobile app like you have today. It will all be a set of APIs that read your behavior and accordingly respond and facilitate your engagement. Very much in the way that nowadays, when you hold your phone in front of a POS, payment terminal, it doesn't ask you to enter a mobile app, it just understands and goes straight through, it will be the same. But it will not just be finance.
Yeah.
It will be, I will be managing all your data. I will be giving you advice on your health, on your finance, on what to buy, on what not to buy, on what to look out for, on where the bump is in the road you're traveling on.
Wow. So a general digital life assistant.
I am convinced about that. That's where it's going by 2050.
Amazing. Hold the mic more near in the next round.
Sure.
We heard you, but we will hear you even better. Thank you. Amazing. Victoria, your bank.
Yes, it's very interesting because in 2050 I still will be 25, so I still have a lot of opportunity ahead of me to make this bank successful. But I agree with my colleagues that I think banking is evolving to something which is more like a super app. Because if you think about it, and many people get it wrong even today, what is the main responsibility of the banks as of today? Not necessarily to give you financial advice, not necessarily to safeguard your funds, but to maintain a healthy society. Make sure that everybody is paying their taxes and no crime can be committed. To safeguard the financial system. So if we are thinking about what is the responsibility of the banks as of today, we can see how it will evolve in the future. Because with this idea in mind, the bank of the future still needs to make sure that the society is working and the economy is working in a healthy and safe way where everybody is paying their taxes and no crime can be committed. So the outline can be different. It could be a super app, it could be an embedded finance, it could be an application, but the main goal of safeguarding the financial health and the economical basis is still going to be there.
Very, very exciting and controversial as well. Where is the border between privacy and super ultra transparency, automatic taxes paid, basically, based on holistic financial X-ray of subjects, private people and corporations? Anyway, I like that. I like that, but
I think we are only two of us.
Prasad, your bank.
Okay, I think I very much believe with what my colleague said that, and I strongly feel there will be no bank. What I will have is a lifestyle services, which I would call Avatar. Now, what Avatar will do is, see, today's world where you have digital assistant, which are on the bank side. This avatar will be your avatar who will know exactly what you want and how your day-to-day activities needs to happen. So the principle on this services will be an effortless, seamless, frictionless banking services, where first it would be on the strategy of I would say not digital first, but intelligence first, When I say intelligence first, digital will be part of that intelligence, because by next 25 years, there will be no digital as separate, I would say, innovation track. It would be day-to-day activity covered. Second would be the end-to-end processes, where this frictionless banking is very much required. And third is personalization, whatever you call it. So that is exactly what, with the generative AI, we'll be able to address your day-to-day needs, attention. So it would be like your subconscious, yourself, that would be the avatar, and that would be the banking service.
Amazing. I love this concept of avatar, and I can also call it bankvatar, right?
Yeah.
But if we call it bankvatar, we can also call it payvatar. And if we call it payvatar, and we are in the third decade of the 21st century, are payments already fixed? Is everything okay in payments? Or are payments still broken in the third decade of the 21st century? I start with Viktoria because she wrote a couple of books about this.
Yeah, so that's right. The current financial system is broken, and I don't think that I'm revealing a big secret when I'm saying that something will happen, and we are just patching the existing system, and we are trying to safeguard it, and we try to save banks here, there, just to maintain, because it's still cheaper than to reschedule the whole financial system, but something will happen. We don't know when, but it will happen. So when we are thinking about the future of finances, there will be a lot of change. And there are some contestants who want to take over the reserve currency and say that it's not going to be the dollar for a long time. Crypto, we saw, which is putting this trust on a completely different aspects globally. Is it good enough to replace the financial system globally? That's the question that we need to, sit and wait, because if I knew the answer, I wouldn't be here. But everybody needs to understand that there are going to be major changes, which is not only going to affect the finances, but everything with it. And then we can mention a bit more about the CBDCs, which is a central bank digital currency, which could be the alternative of replacing this financial system. But,
or augmenting, fixing certain aspects
exactly.
of this current arrangement. Okay, I will try something. Kamalika, are payments perfect in India? Because I am the greatest fan of UPI, United Payments Interface, in India, with almost 1 billion transactions per day. There were a couple of days when they reached 1 billion transactions per day. Yeah. So are payments perfect, at least in India?
I don't think it's perfect in India either. The reason being, yes, UPI has made it increasingly easier for us to pay digitally. Like, most people in India do not carry their wallets with them when they step out. Everyone just scans and pays quickly, because that's quicker, cheaper, efficient. But that said, UPI is just an account-to-account transfer mechanism that's real-time and instantaneous. A lot of people would still want to place their high-value purchases on, say, their credit card. But credit cards are not interoperable with UPI. So there is a break in the journey over there. And there are lots of other, and very interestingly, in the previous panel that you were moderating, there was another lady who came up to me and said that, you know what, I'm a company that's based out of Netherlands, and we want to make the process easy for because we have a huge base of Indian consumers. We want to make the process easy for our Indian consumers to just pay via UPI. Can we do that? UPI is not interoperable with all other currencies either. So there's another block over there. I mean, RBI, the Reserve Bank of India, is working to make it interoperable, but it has a lot of regulatory and bi-party agreements you need to go, so it's very slow over there. And another thing that I feel is that in India, because UPI has been a part of the digital public infrastructure, or the DPI innovation, this thing that was brought about by Indian think tanks, the government has gone ahead and said that we're not going to ever charge any money on UPI transactions. which hinders innovation, because if you aren't making money as a payment service provider, you're not going to want to innovate, you're not going to want to fight frauds on UPI. So I think it's got a long way, but it's not perfect. It's good, but it's not perfect.
Yes, this price cap. You know, where is the price cap? At zero? Zero, that's free. Where is the price cap in Europe? Visa, MasterCard, interchange fee, okay. Anyway, we end up. Pangratios, are payments broken and is KPMG fixing?
That's very good, that's very good. And actually I was thinking of my pains. We asked KPMG. But I agree with Victoria, and obviously excellent points raised with the example of India. They are definitely fractured. If not broken, they are fractured, and that's something which is evident. If you had been following what would have been the future of banking and payments in 2010, this is different from the future of banking in 2024, which the 2010 futuristic sort of outlook was way more futuristic than it is now. So I can definitely say that how it's evolving too quickly for my pain as, let's say, being one of the big audit, tax, and consulting firms globally. It's a huge pain exactly because of the areas that have been raised in terms of trust. How do you eliminate fraud? How do you account for the rogue players here and there? Different jurisdictions, different statutory requirements, different regulatory process, different regulatory philosophies. That's quite different. If you can actually understand the philosophy that is stemming from Europe versus the Federal Reserve, we've seen the directive from 2023 by Biden. So we see specific economic philosophy stemming, notwithstanding that the rapidly evolving hubs of finance are in South Korea, and now it's Dubai. In addition to the traditional Hong Kong, New York, and London. So what we are seeing, and I'm very, as I said, stressed in terms of this is my pain, and maybe the pill is a bit hard to swallow, but my pain is, we have to all sit together and see whether we can bring the right kind of innovation in all aspects of the industry. Like similar situations that we're discussing and seeing the pains of every actor within the ecosystem, let's say. But from my financial technology angle and my support of innovative tech companies, which I also have that angle, I understand that the drive that exists, and there has to be some sort of a money-chasing process. If there is no money, there is no innovation. So we need that innovation. I don't know how that's why in my sort of preamble I stated that there has to be some sort of a very nice balance, a very stable balance between the state and how the finance system works, because I totally agree with Victoria how that interplays with how societies evolve. And lest not we delve into, we are sitting in our panels today and not think of how the population is evolving. Financial inclusion now, with the introduction of credit cards in the 1970s, financial inclusion was at 4.5 billion. It was 50%, which was 2.5 billion. But now it's 4.5 in the 2010s, and has increased rapidly as a result of the new entrants in the market by another 1.5. So we're around 5.7 of financial inclusion, that's in billion, and we are 8 billion. So we are still missing a huge chunk of the population, which have specific age distribution. They are huge wealth accumulators. So I'm not convinced that the way that we are, structuring and thinking of how the future would look like will actually emerge in reality, because there are trends and forces that come in parallel, which have in the past, in the 1800s, in the 1900s, brought humongous changes in how we see the world.
All right. So over 3 billion people, still not included. All right. That's very, very important. Yannis, payments, broken or very much broken? Sorry, that wasn't a good question.
Very much broken. And the reason is that different parts of finance use different methodologies, local versus cross-border payments, different systems and different workflows. But the technology is there. Look at crypto, which I don't necessarily believe in, but look at the technology of crypto, blockchain. The technology is there to make seamless data transfers that are cryptographically 100% secure. Because moving money is a data transfer. Moving money is a data transfer at the end of the day.
Exactly.
So the technology is there. All it requires is adoption. By 2050, I have no doubt that the need to make frictionless, low-cost payments will force everybody to adopt one workflow and technology, perhaps SWIFT, perhaps blockchain, or something similar.
Okay, perfect. So by 2050, this will be solved. This will be fixed. Prasad, what is your view? Are payments okay or broken?
I would say absolutely broken.
Oh, okay.
Again, I'll give you a bit of a statistics on, if you look at the global economy, it's in trillions, and fraud is still 2 to 3%. So if you look at the money which is still, you're missing out on. So if it was well integrated, you would have been able to track them. So that is one aspect of it. Second is, if you look at, again, I'll take the example of India. While I've been out of India for last 18 years, but still what I looked at pre-COVID time, where only 38% payments were happening, digital payments were happening, and after COVID is around 68%. So that is increasing. But what was happening pre-COVID, it was a parallel economy going on. So it was very difficult for a country to also progress if this is a big gap, or this is a big, I would say, loophole. So there's a lot to be developed. And this is not just India, I would say every country, there's a parallel economy. The percentage might be less or more. If you look at a lot of taxi drivers, even today I saw, he was asking for cash. So, and if he said, okay, card payment, I'll charge €2 extra. Why is that? So, there is still, I would say, a lot of things to be done. While regulatory changes are coming up, things are improving, but it will take time.
If someone wanted to be unfair and cynical, that person could put your anecdotes together, like this super transparency, cash versus digital payments, overcharge, all this. But that is an unfair and generalistic way. Anyway, I am turning to the audience. So 2050, will we have banks or only this Yannis type of dissolved services, general digital lifestyle services, including financial services, banks, or only more broad ecosystem banks, okay? We are making it very polarized. So hands up who believe that we will have banks, at least some banks in 2050.
He's putting me on the spot, as you realize.
Sorry, I didn't get it.
You are putting me on the spot.
No. I am honestly interested in this. I love your vision, and I think we do. But I want, okay, so some standalone banks, like 10% of the audience. Let's try the inverse, the opposite, just to be sure. So only ecosystem banks, wider ecosystem banks. Okay. Now I modified 2/3, 1/3. So you see, you got validated by our amazing audience. Okay, all right. Now, external forces. Interest rates. After the 2008 financial crisis, the concept of Fintech became a buzzword and very important buzzword. But between 2008 and 2022, end of 2021, in all of the major economies, we were in a basically zero interest rate environment. This has fundamentally changed since regulators are waking up. That's another external force. So how do you see? Is the table turning? Are we entering a banking renaissance? And these 50,000 fintech startups, small, nimble, creative, flexible, innovative, agile, are going a little bit down? What's going on? Let's start from here.
So I think India was uniquely positioned because we did not really reduce our interest rates during the COVID period. We maintained it at a lower level, but yes. What we did face issues on the external factor was currency depreciation, which is still happening. But that aside, one of the very interesting things about Indian regulators is that from 2012, they realized that technology is here to stay, and if we don't stay ahead of the curve, we're not going to understand what's happening. So a lot of the innovations that you see that's coming up in India is kind of regulatory driven, where they lay out the roadmap or the plan for the infrastructure, and whatever developments and innovation happens, it's driven by the public market forces and banks. So banks really did not have an option to not upgrade themselves. So the banking renaissance that you were talking about, it's kind of happening as we speak, where one of the biggest example is probably the open banking, open finance initiative in India, where initially banks were very resistant. They kept saying, this is our data, we don't want to share it with others, our customers are going to try it, you're going to make us lose our value prop to our customers and all of that, till the Reserve Bank came down and said that nothing doing. If you want to be a part of this ecosystem, where they give a bunch of advantages, seamless digital straight-through processing for MSME lending, which has been a big pain point in India, and all of those. So if you want to get access to that, you better start sharing your data and start sharing quality data. By a lot of banks, especially the big nationalized banks that are there, simply didn't have the server infrastructure to service it. This was in 2022 end, cut to mid of 2024 now. The success rates of all our APIs over there is at a 93%. Which is amazing. I mean, who would have thought that state-owned banks would actually amp up their systems? So I think somewhere a little bit of a hard teacher stance that the regulator takes is needed, especially if you want to drive innovation, because at the end of the day, the regulators are someone whose main job is to safeguard the interest of the end consumers, to make sure that, the end consumers don't give in to greed and all of that, and the financial services that we give out to them make sense to them. So that way, I think it's been a fair play in India, where these sort of regulatory-driven initiatives have further helped fintechs take the game forward in terms of innovations.
Okay, I understand, controversial, but crystal clear. Pangratios, what is the external force matrix? What's happening here?
I sort of alluded it in my previous comments. Interest it has been a common feature in the last 6 years. It was heavily publicized. It was, everyone was tuned in to hear what Lagarde was saying in terms of the euro, the Fed. Also, it was quite the news. I think the regulatory aspect is key and should not be underestimated, and it relates to the tolerance with which integration at the state and regional, state, national, and global level, but at the various different geographies that we are dealing with. China is completely different, with different philosophy. We've seen that it's fragmented. I don't see how that can be easily collated and combined. So again, I reserve I have a specific, not only in terms of my economic philosophy, but also in terms of how things, historically, I'm seeing them evolving. So the regulatory aspect is huge. It's completely different in Europe versus other jurisdictions. Even in the UK, the regulator is completely different. It's similar. There are similarities, but obviously there are some completely different philosophical attitudes towards the areas that we are discussing. And obviously, at the end of the day, and this is huge, coming from an audit firm, we had seen startup technologies and sort of innovative PSPs that completely derailed the market. And the way that the pain that we are dealing as auditors, let's say, sometimes, because I need to speak for my fellow auditors as well, is huge. If we say, for example, and Yannis, you can relate to that as well, if the next day, and this happened with Wirecard, for example, if we say we are not signing the audit report, the value goes down 50%. So this is exactly the pain that everyone, it's extremely well to discuss about the intricacies and nuances that within the, but if we cannot, then the next day is 50% down. And if in the next day we don't say, okay, we don't fix a date, it's another deep dive.
Yes, by the way, when you are thinking about investing or giving advice related to transactions related to fintechs, this is a very important thing. Who has audited financial reports and who has not audited or audited late or audited with remarks? Exactly. And so it's a very interesting
and it can happen to the best of regulatory authorities. So which is something to to think about, and obviously how that will see. I'm still thinking 2050, and I'm thinking 2025, 2026 was gonna be the evolution. I'm taking it year by year. This is my current. I'm wrestling with that currently. So, yeah.
Okay, Yannis, external forces.
Thank you, David. I will make quick comments because I know we are running out of time here. Two external forces that you asked for. One is interest rates. Well, interest rates are interest rates, but what they do is they reduce the demand for money. They reduce the demand for credit. If you have higher interest rates, lower reduction of demand for credit, that makes a bank less relevant. It makes a fintech more relevant, because fintechs provide more clever solutions. For example, over the last 5 years, the demand for buy now, pay later, if you've ever heard of that, is now 10% of the market. It used to be 0, right? And that's clever fintechs that are, even though it makes no sense, buy now, pay later at the same price that you are paying now, but that's how it is, and fintechs take advantage of that. So that's the first comment. The second comment on regulation, I see regulation pushing on. I see it increasing. I see it entering other areas that currently are not that much regulated, like financial conduct, retail conduct, climate change, sustainability. So a number of different areas that will impact all companies, but especially banks. I do hope that an increase in technology will help make the system more efficient, because as you increase regulation, you increase the cost and the friction that the banks have to go through. So I do hope that the technology will be able to resolve a lot of the additional regulatory constraints that will come. Thank you.
Thank you. Very important. Technology can help to regulate. So that's very, very important, as well as to comply. Anyway, Viktoria, external forces.
Yeah, I agree with Yannis. Fintech is fin, which is regulation, and tech, which is tech, right? And they are growing each other in a way that if one is changing, that affects the other one as well. So we can't just separate now, because at the moment, I don't think that there is a standalone fin company without having any tech. Even the high street banks started to introduce tech and those legacy systems until they create an app out of that good luck. Where I really see the major problem is that common sense is not common. So even though that the regulator is telling you, I think this is what we need to do, guys, what you get out of it and what I get out of it and what is my benefit to get out of, a creative way of finding the loopholes, it's a completely different story. And that's what I see, that unless there is a common understanding of what we are trying to do, there's always going to be creative loopholes, there's always going to be an innovation, which is, guys, this is not what we are supposed to do, right? What we saw with a couple of innovations here, looking at you, crypto. Because the problem here is that one regulator thinks the same idea in a completely different aspects. And that really affects both of the fin, which is obviously the regulation, and the tech, which is the innovation part of that.
Very, very important. Regulatory inconsistency and so on. Think about the international, so to speak, global, de facto, but informal banking regulatory framework. Basel Committee on Banking Supervision, Bank for International Settlements, and so on. How they relate to emerging technologies and how that is interpreted as per local regulators. Great gaps.
And just one more sentence. Unless we can agree that is this passport copy blurry or not, that's where the problem starts, right? Because it might be blurry for me, but it's going to be good enough for you. So that is a lot of subjective elements in that as well. So even though that we've got the directive and the regulation and it's black and white, how we are executing it gives the nuance of a difference.
Right, here. Not to talk about the fact why we need passports in 2024. I mean, But anyway, Prasad, so basically, what is the external force matrix? What's going on?
See, I think I will not further dive into the regulatory thing because I think my colleagues have really spoken well on that. What I would like to further add to it is, see, regulators have to work together with the banks and technology providers because the external forces, like I would say, cloud adoption, it is actually bringing cyber threats. So how regulators can address that proactively rather than after an incident react to it. So those are the things together with banks and technology, regulators should work addressing it. So I think that is a journey which, and I'm very much supporting regulators, but there has to be some kind of I would say, I'm trying to think of a politically correct word, a good handshake between all the three parties.
Yes, that's hard, and that's counterintuitive. Now, the floor will be yours. We will start with me asking a question from you. Banking 2050, your vision. Put your hand up, I will listen to your vision, and you will immediately receive a book, okay? Even if it's one sentence. So, Banking 2050. Wow, here is the very, very brave gentleman. Shout into the mic.
Thank you. It's been really a very, very interesting discussion, I have to say. I also need to give a disclaimer first. I'm sorry, I work for a bank. I can return the book, but I want to give my opinion.
You work for a bricks and mortar bank.
Yes, a bricks and mortar bank.
You will need the book.
Thank you, Victoria. Obviously, I want to learn. That's why I'm here, right? So I completely agree with the statement that moving money will become seamless, easy, hopefully without any worry. Parking money is a different story. And I will use two words why. Human greed. I don't want to use the word human nature. Human greed. Okay, if we could resolve that, which I don't believe we can, then we might go to that seamless personal advisor for everything. But the parking of money, I think, will be a reason for banks, perhaps not brick and mortar, but something almost as close to that, will be a reason for them to exist. Thank you.
Okay, let's give the gentleman a hand because he's very brave. He broke the ice. Very, very great. Okay, I feel there is minimum one more vision around here, even if I don't give a book, but I give a book because Victoria wrote. So here is the gentleman. Okay, speak up. Meanwhile, I am bringing your book.
Yeah, hello. Very interesting conversations. So I think a lot of smart people in the world understand that attention is money. So if you see like Mark Zuckerberg, for example, at one point with Facebook, he was trying to create his own digital currency. And he's very clever for what he created. And I believe more and more people will understand that attention is money, and who gets the attention of people will eventually get their money, whatever it is, if it's crypto or whatever currency it will be. And I believe that will be the ecosystem that will create the future, the banks of the future. Yeah. Wow. Thank you.
Thank you. Let's give the gentleman a hand. Amazing. Okay. Now, our time is up, but we still have two books. So one word answer. Brave people, one word answer. One emerging technology that you think is relevant in financial services. One word. Okay, wait.
Digital currency.
Okay, digital currencies. Do you mean central bank digital currencies or crypto? Central bank digital currency. Amazing, you will receive a copy. And one more word?
Blockchain technology.
Blockchain, amazing. You will receive a copy. Please come forward for your copy. Let's give a big hand to the panel. You have inspired the audience. Yes, please send the copies back to the right people. And let's take a picture all together. Thank you.